Hi everyone, my name is Dr. Wise and this is my assistant, Abo. Today we would like to talk to you about the Policy Reverse Mortgage Program. We'll be covering the program's features and benefits, eligibility criteria, and application flow. The Policy Reverse Mortgage Program is operated by HKMC Insurance Limited, HKMCI, a wholly owned subsidiary of the Hong Kong Mortgage Corporation Limited, HKMC, mentioned earlier. Policy Reverse Mortgage is a loan arrangement. Its purpose is to provide people aged 60 or above with an option to create lifelong payouts by using their life insurance policies as collateral to borrow from a lender. The monthly payouts will be calculated according to factors such as the death benefits of the life insurance policy, the age and gender of the borrower, and the selected payment term. Borrowers can choose to receive monthly payouts for a fixed period or throughout their lifetime. And more importantly, they do not need to repay the Policy Reverse Mortgage loan during their lifetime. Borrowers can choose to receive monthly payouts either over a fixed period of 10, 15, or 20 years, or throughout their lifetime, and they have the flexibility to apply to switch to another payment term anytime after closing of the Policy Reverse Mortgage loan.
No repayments for life? That sounds too good to be true.
In general, borrowers do not need to repay the Policy Reverse Mortgage loan during their lifetime, even if the payment term has ended or the maximum lump sum payout amount has been withdrawn. In most cases, the Policy Reverse Mortgage loan will become due upon and payable until the maturity of the life insurance policy or when the borrower passes away. The lender will enforce the life insurance policy to fully repay the outstanding loan amount. The amount recoverable from the life insurance policy will be the death benefits. Suppose the amount of the death benefits exceeds the outstanding loan amount under the Policy Reverse Mortgage loan. In that case, the lender will pass the surplus onto the personal representative after repaying the outstanding loan amount in full. HKMCI will bear any shortfall under an insurance arrangement between the lender and HKMCI.
What if a borrower changes his mind and wants to repay early in his lifetime?
Borrowers can make full repayment at any time if needed, such as when they want to redeem the underlying life insurance policy without incurring any penalty. However, partial repayment of the outstanding loan amount is not allowed.
Can I cancel the loan if I don't feel it is necessary after applying?
Borrowers are allowed to cancel the loan within the first 6 months when the outstanding loan amount is fully repaid on the designated repayment date. They will be given a full refund and waiver of the relevant mortgage insurance premiums. However, they still need to bear any accrued interest, financed fees, and the relevant fees concerning the cancellation of the reverse mortgage loan.
After the program takes effect, will my monthly payout be reduced due to any changes in the economic environment?
Don't worry. Once the payment term is determined and approved, the monthly payout amount will remain unchanged throughout the payment term unless the payment term is switched or the borrower applies for a lump sum payout during the payment term.
What is a lump sum payout?
Abo, there are times in life when we'll need money to solve a problem, and a lump sum payout can help the borrower meet those unexpected needs. For example, the borrower can apply to borrow a lump sum payout to settle any unpaid premium on the life insurance policy at the time of the Policy Reverse Mortgage loan application, so as to meet the eligibility requirements of the program. In addition, borrowers can also apply for a lump sum payout to repay individual debts, such as personal loans, policy loans, revolving credit facilities, credit card balances, etc.
Under what other situations can I apply for a lump sum payout?
Life is full of variables. For example, we may need a lump sum payout for home improvements, repairs, and maintenance to avoid property disrepair over time. As we get older, we'll be increasingly prone to illness, so a lump sum payout can also help borrowers pay for medical expenses. Dementia is a severe problem for the elderly. If necessary, a lump sum payout can be used to pay solicitors and medical practitioners' fees for preparation of an enduring power of attorney or expenses for a court order application. Ultimately, we will meet our end in life, A lump sum payout will be helpful for borrowers purchasing their interment rights at a columbarium or cemetery, as well as paying for funeral expenses.
I see. Will it affect the monthly payout amount if taking out a lump sum payout?
If borrowers withdraw a lump sum payout, their monthly payout amount will become lower accordingly. If they withdraw the maximum lump sum payout amount, they will not receive any more monthly payout after that.
Then, how much monthly payout can a borrower get from the policy reverse mortgage program?
There is no limit on the number of policy reverse mortgage loans allowed to be taken out by a borrower, but each loan can only be supported by one life insurance policy as collateral. In other words, if borrowers have several insurance policies, they can apply for more than one policy reverse mortgage loan, each with one life insurance policy as collateral. But be aware that the aggregate amount of death benefits of all the life insurance policies assigned or to be assigned as collateral is capped at 15 million Hong Kong dollars under the program. Applications with an aggregate amount of death benefits exceeding the cap will be considered on a case-by-case basis. In general, the higher the death benefits of the borrower's life insurance policy, the higher the monthly payout amount. The older the borrower is at the time of the loan application and the shorter the payment term, the higher the monthly payout. Let's see what the calculation results will look like. The first thing to keep in mind is that the higher the death benefit of a life insurance policy, the higher the monthly payout. The age of the borrower at the time of application and the payment term selected will also affect the monthly payout amount. The borrower can choose either a floating rate or fixed rate mortgage plan to meet his personal financial needs. In general, a fixed rate mortgage plan offers higher monthly and lump sum payout amounts than a floating rate mortgage plan. As for the interest rate levels of the floating rate and fixed rate mortgage plans, please be sure to check the latest announcements from HKMC. Finally, the monthly payout amount will remain constant or increase over the payment term, depending on the annual review of the death benefits of the life insurance policy.
Doctor, you have mentioned a lot of things, but you still haven't said anything about the costs under the policy reverse mortgage program. Shouldn't you cover them as well?
Borrowers need to pay interest expenses and mortgage insurance premiums. In general, borrowers do not need to repay the loan during their lifetime. There are also handling fees involved, but these costs can be financed in the policy reverse mortgage loan.
This program sounds awesome. I'm going to apply now.
Abo, you forgot that you are a robot. There is no life insurance for robots. But in any case, retirees will have to know how the application process works. Let me walk you through the 3-step application flow for the Policy Reverse Mortgage Program. To apply for the Policy Reverse Mortgage Program is very simple. First of all, inquire at HKMC Retire 3 consultant or participating institution who will explain the Policy Reverse Mortgage Program to the applicant and conduct a preliminary assessment on eligibility.
How can I contact an HKMC Retire 3 consultant or find a list of participating institutions?
You can call the HKMC Retire 3 hotline 2536-0833 to speak to a Retire 3 consultant. You can also find the list of participating institutions on the HKMC's website. The second step is to make an application. After completing the preliminary assessment, the applicant may submit an application through a Retire 3 consultant or directly to a participating institution. The final step is to execute the legal documents. After the application is approved, the applicant can execute the relevant legal documents with the lender.
I know I am not eligible, but who is eligible to apply for the policy reverse mortgage loan?
Firstly, the borrower must be aged 60 or above and hold a valid Hong Kong identity card. He must also be both the policyholder and the insured of a life insurance policy. Lastly, he must not be an undischarged bankrupt or otherwise subject to a bankruptcy petition or individual voluntary arrangement. In general, the borrower's life insurance policy must be issued by an authorized insurer in Hong Kong and be denominated in Hong Kong dollars or United States dollars. Moreover, the life insurance must not be associated with any investment features and subject to any restrictions or deductions on the payment of death benefits by the insurance company, and its premium must be fully paid up. Furthermore, the life insurance policy must be assignable and not contain any restriction on change of beneficiary, and the beneficiary of the life insurance policy must be the borrower himself or the borrower's estate.
Dr. Wise, I posted your messages on the internet and got a lot of response. I wonder if you can answer their questions.
Sure, just put up the questions. We'll go through them.
How is the specified policy value of the life insurance policy determined under the Policy Reverse Mortgage Program?
Basically, the value of the designated life insurance policy is equal to the death benefits amount of the life insurance policy at the time of policy reverse mortgage loan application, including the policy sum assured, dividends paid, and accrued interest. Borrowers can also choose to use a lower death benefits amount as the specified policy value for calculating the monthly payout amount.
If multiple life policies are assigned simultaneously, can I choose different payment terms for each policy?
Yes. There is no limit on the number of policy reverse mortgage loans allowed to be taken out by a borrower, but each loan can only be supported by one life insurance policy as collateral. Therefore, each policy can have a different payment term under a policy reverse mortgage loan. The aggregate amount of death benefits of all the insurance policies assigned or to be assigned as collateral is capped at 15 million Hong Kong dollars under the program.
When a borrower applies for a lump sum payout to pay off a personal loan, will HKMCI check his credit report?
HKMCI does not check a borrower's credit report when approving a policy reverse mortgage loan. Please visit the HKMC's website to learn more if you have any questions, or call the HKMC Retire 3 hotline 2536-0833 to speak to a HKMC Retire 3 consultant. Goodbye, and hope to see you again.